Hello everyone, it is Evan from the Trade Risk on Thursday, October 22nd, here with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, some leading sectors, and then get into some individual names. We'll jump right in today to the SPY ETF, and the bulls put in a nice 1.66% up session on the day, completely reversing yesterday's down candle and also breaking through recent resistance. So let's take a look at what's happened here. And again, ever since bottoming down here below 190, it's been a straight line higher. We cleared recent intermediate resistance right around 199 in the SPY earlier in October, the 8th to be exact. And at this time, the market was really overbought on this candle right here, and we thought, you know, it was very stretched to the upside. It needed to cool down, at least digest sideways, and we got exactly that. So we had those 2 days of pausing sideways. We had the first little breakdown of minor support, a little bit of follow through, and then this candle right here, the 15th, last Thursday was your next was the next explosive move, but it was also the next day to really take notice, to see that while we were really overbought in these on these few days right here, we pulled back, retested the breakout, retested some of the fast EMAs there, and we immediately exploded higher. So this was yet another signal that we were really strong up here, and that buyers were just still holding, very pent up. And then again this week we've gone sideways. Friday we continued with that move. We went sideways Monday and Tuesday. Yesterday we got a little bit of that sell signal when we started breaking below these prior lows and closing on the lows, but again, context is important to understand that the close is still very much so above the fast moving averages. We aren't as overbought as we were in here. All little subtleties which make it still very much a bullish environment on this time frame, at least in the near term. Today, of course, we saw the complete reversal, sort of a classic squeeze here, which occurs when, you know, in this case, yesterday, shaking out some of these weak longs here with this close, probably enticing in some shorts here to try and catch a rollover or at least a multi-day pullback like we saw in here. And of course, we got the exact opposite today, breaking through resistance and screaming towards the highs. So a close near the highs of the day and back above, or at least challenging right now this area, this breakdown area that that held as support for so many months earlier this year. So a very important area now for the bulls to really push above, and what the bulls really want to see here is a continued move up above this prior breakdown level into this range, and then ultimately you start to look at all-time highs and the all-time high levels that are up here right around SPY, you know, 213 or so. But you know, nothing's really changed here ever since, you know, depending on how you want to look at it. I mean, either this day here, this day here, there were a lot of signs along the way to get bullish, to at least not be fighting so hard on the short side, and the clues have just been stacking up, you know, on the bull side, really. So that's where I sort of stand on the market. I think, again, you got to be optimistic here. You should have been for a few times now. You know, again, if you weren't a believer before, you know, you've had your clues. So that's the way I'm looking at it. Again, I'm not saying it's an easy market. It's still challenging. There's a lot of chop in here, followed by explosive moves. It's not easy, and again, I don't think you can easily be just all in long here. I do think you need to trade, you know, sort of accordingly. But we are still holding long positions. We've been in a handful of names now for a couple of weeks, at least, as we've gotten sort of more long throughout this grind higher. So that's where I stand. Again, kind of one foot in the door, having the long exposure, but not being all in. And definitely having cash as a position. Now, if we look at some other markets, IWM still lagging, still does not look nearly as good as what the SPY is showing us. So this is, you know, certainly where the bears and you know, the shorts are going to want to stake their claim, want to be involved in, and just want to look towards to really be careful if we start to see the IWM catching a bid, because so far it hasn't. It's stopped the bleeding to the downside, but again, you can still see at best it's range bound here. It can't clear these highs, so definitely a little bit of trouble here. And the laggard right now is the small cap index, and the Qs had a really nice leadership day today, closing up over 2% and really starting to get back into the midpoint of its prior range, and soon enough we'll be challenging this 111 mark is what the bulls would want to see on deck. So certainly a lot of strength here, and you can see just how sharp and V-shaped fashion we've come from the lows down here right around $100, taking out resistance and then grinding higher. Now if we look at some other markets, we'll look at TLT first, and this had a up session as well today. So stocks and the bond market closing green on the day. Certainly not as strong, but still holding above this important area that we've had on our charts now for a while. I think as long as it can hold above 123 or so, I think it's still constructive and favors the bull side. If we look at USO next, you can see this one had a up session, and it is towards the lower end of this range. So we've been in this holding as support right around 14 and a quarter or so for multiple weeks, multiple months now, and the bulls definitely want to see this hold if they're to prevent further washout and a potential retest of these lows. So right now it's still range bound. It's anybody's game right now, and the fight still kind of goes on here in USO. It's tough to trade inside this. Again, you're at the lower range, so potentially if that's your style, you can start to maybe accumulate some on the lows and get out if you see a clear breakdown, but not my style, but something you could consider. UNG continues to be in its strong downtrend, nothing changing here. Fast moving average is still lower. You had this very peculiar looking kind of grind higher here, and that ultimately resolved to the downside, and we continue to resolve to the downside ever since breaking major support back in September of this year. If we go to the metals here, gold pulling back a little bit. I think this is healthy. This is constructive. What you want to see is support hold. You want to see maybe a retest of this area right in here, and you want to see it hold and then eventually get some more upside there. Silver, similar situation, been a little bit of a choppy mess here recently, but still holding constructive, still above recent resistance here. So I think all things considered, still short-term favors the bulls in this case. Now if we get to some leading sectors, it's probably easier to go to the laggards because so many sectors are now working here. XLB, look at this nice session today. Consolidated very healthy here at prior resistance, and now you had this nice kind of igniting breakout move, which looks like wants to start the beginning of a new leg higher. So very constructive action here, very good looking chart in XLB. XLK, very explosive move here as well, as it's already been riding up the fast moving average. You're seeing a little bit of acceleration today. That's very constructive. XLI, monster day today, up almost 3% on the day, and now coming in and pretty much taking out, challenging this prior level down here as well, right around 54.60 or so. The staples had a really good session today as well, up 2%, and coming up to very close to all-time closing highs. In fact, it might have been all-time closing highs at 50.82. What was the close here? It looks like we challenged, so we closed right at all-time highs in the staples. Very constructive. Utilities, straight grind higher. It's now at resistance. IYR, same thing, looking constructive. The only three standouts to the downside that I see is XLF, which isn't even really that bad of a looking chart, still up 1.6%, but overall lagging the pack, but nothing too dramatic there. And healthcare, XLV, this I guess was the dog, might have been the only red sector on the day, I'm not too sure, down 0.60 on the day, and even IBB closed up a little bit, but still some volatile action and still a vulnerable chart here, especially if it loses these cluster of lows. 295 is held as support many times now, and the bulls definitely don't want to see that given up in the near future. Now if we look at some individual names, we'll go through them quick. Apple's first, starting to perk up here. It's got earnings soon, and it's heading back up to this band of resistance. So you get an event coming up that should be expanding pretty soon. Google's reporting earnings right today, and we are seeing a monster move in Google actually in the after hours. Looks like it's up at $740, trading now at about 15 or about 20 past 4 Eastern time. So 740, clearly new all-time highs. Looks like we're gonna have another big gap in our hands, and this one's been in an uptrend. So the surprises typically favor the bulls when you're in this type of an uptrend. So congrats to all the Google longs there. Next, we'll go to Amazon because they are reporting too. And bear with me one moment. It is up to 620 in the after hours. So this one up with another big gap. So both of these names, and this one has been gapping higher. Look at all of its past prior earnings reports. 1, 2, 3. This is going to be the 4th consecutive, 50-point gap in Amazon to the upside if it holds into tomorrow. So very constructive action. Congrats to everyone there as well. So that, of course, now bodes very favorably for the market heading into tomorrow. If we get back onto some other names, Tesla, we'll go to that. This one's definitely lagging. It's at the lower, sort of this lower quadrant, lower end of its recent large range that it's been in now. 100-point range here on the weekly chart shows it a little better. Definitely not a very exciting one compared to some of these other names. Facebook closed just shy of the $100 mark today. 99.67 all-time closing high, 2.64% on the upside. And let me just make sure that this one is not reporting. Maybe it reports tomorrow. I thought this one's reporting soon, so definitely a nice run up into that announcement. Twitter hanging in there, closed down on the day today, but still I think it's healthy as long as it can stay above this 28.40, 28, low 28 area. If it can hang above here, I think the bulls can continue to stay in control, but we definitely want to see it hold above that level. If we go to GoPros next, this one down on the day today, so couldn't get saved even by the uptick in the market. Still struggling here, still in a downtrend, very beaten up. Earnings coming up. Let's see if that one changes anything there. Alibaba, this one had a nice session today, closing up 2%. It's in an uptrend, starting to turn the momentum to the upside here, so this one certainly looks constructive as well. And that's all I'll run through for today. There's a lot of charts to run through as far as trade ideas go. I'm going to try and post them on the stream later. But for now, especially with some of this action we're seeing in these after-hour moves, I would expect upside moves here in the SPY, in the Qs, particularly tomorrow, especially if these earnings hold. So it looks like, again, surprises to the upside still. Bulls are in control, and it's a tough one to fight right now. So I hope that helps. Thanks for watching, and I will catch you guys next time.